What's up, everybody? Investing Club here. I just wanted to make a quick video on my thoughts on Apple and what I think about its valuation. As you probably know, Apple has been on a tear. We can see in the last year going from $156 all the way to where it is now at $318. Last year, Apple stock has doubled in price. But I want to show you how the fundamentals of Apple do not justify this price increase. So here we are on Apple's income statement, and we can see for the past year, 2018 to 2019, their revenue fell. Their revenue slightly fell, and we can come down to their net income, and their net income also fell. And as we go down to the earnings per share also stayed also fell slightly, pretty much stayed consistent. So the question I want to ask you is, Apple didn't make any more money than in 2019 than 2018. So why did the stock double? Right now, Apple is being valued at 26 times price to earnings. So why did it deserve the jump from being valued at 13 times earnings where it was before to 26 now? So the stock market chose to raise the valuation of Apple from 13 times earnings to over 26 times earnings, and for what seems like no apparent reason. So why did the market double the valuation of Apple? And well, it beats me. The only reason Apple doubled in value is because a bunch of people suddenly decided they want to own Apple stock because it's what's popular right now. You know, Apple makes all these cool products that everyone wants to own, and they're changing the world. And because of this, you have to own Apple, right? And even when Apple is facing some challenges, like I just said, their income and earnings went down, and iPhone is losing market share globally for smartphones. So it's not the bright future that Apple had in the past. They're running into some problems. I guess all these problems don't matter to people that want to own Apple, and this is because Apple's what's popular right now. And this is exactly why retail investors lose money in the stock market. They see a company like Apple, of course, everyone knows Apple, and they see the price doubling, and now everyone's saying, I got to own Apple. It's going straight up. And the issue is most people don't look at the fundamentals. They just look at the price and decide that it's a good buy. And Warren Buffett says looking at just the price is not investing. This is a perfect example of the Mr. Market metaphor that Warren Buffett likes to use, which is the stock market is this bipolar crazy person, and right now they're offering you Apple stock at $300 a share. And what you can do is you can either listen to this crazy person, this maniac, and buy Apple at this price, or you can wait until this person gets depressed and the price they want for it, and they think Apple's worthless and the price they want for it tanks. So Apple has been going straight up. If we look at the history of Apple, we can see we see what happens in the past when Apple goes on runs like this. The first time was 2011, 2012. So, from right here, Apple went up 68% in less than a year. And after that, what we see is a fall of 42%. Again, here we see Apple runs up and they have a fall of around 28%. And again, right here, from 2016 to 2018, Apple goes up over 140%. And what happens after is a drop of 31%. So, no one can predict the future, but it's clear that Apple is overvalued right now, and all these people are buying in because all they're doing is looking at the price. But what happens when the price starts falling is everyone's going to panic and start selling, which could eventually lead to attractive buying opportunities for Apple. So I would definitely not buy Apple at this price. Again, Apple's popular right now, and if you want to buy stocks that are undervalued, looking at popular companies is almost never going to find you any opportunities. So that's all I wanted to say in this video. It's important to look at the fundamentals of a company more than the price, because fundamentals are what ultimately creates a change in the stock price. So that's all I wanted to say. Like and share this video. Leave a comment and I'll be sure to get back to you. And I'll see you on the next video. Bye bye.